anyone who understands healthcare pricing, and especially anyone who understands the post-NSA world as far as determining that final rate of payment, should immediately understand how predatory it is to charge 35% of the delta between the charge amount and the final payment. I think one of the examples that was provided in the New York Times piece was where the insurer ended up with a shared savings fee of like $50,000 or something, and the payment to the clinician was like 5,000. Those numbers aren't exactly right, but the orders of magnitude are. That's, I mean, literally criminal.
Healthcare providers are experiencing a massive financial strain brought on by big health insurers. That's why we are embarking on a journey to unravel the complexities, challenge the status quo, and find solutions to economic challenges that have been plaguing physicians, hospitals, and others for far too long. Welcome to The Strain, winning the battle with big health insurance.
Hello and welcome to The Strain. I am Eliot Listman. With me is Jim Blakeman. Our guest today is Patrick Velliky, the Vice President of Government Affairs at Envision Healthcare. I have seen Patrick in action, and he is a powerful voice for healthcare and physicians at large. His advocacy ensures that our nation's policymakers are engaged about solving the very real challenges facing physicians and the healthcare system. Welcome to The Strain, Patrick. Thanks for joining us.
Thanks, Eliot.
And it's always interesting to hear from somebody who's been on both sides of the table, both the payer side and the healthcare provider side. If you can, tell us a story about your transition, how you moved from the payer side to the provider side.
Yeah, at this point, there are very few sides of the table left that I haven't sat on. I got my start in advocacy on the payer side as my first private sector experience, working for two different major health insurers, two of the big five. Transitioned from there into the hospital side, working for the Federation of American Hospitals, and then over to Envision. It's very interesting to have the payer perspective, plus the facility perspective, which is not always the same as the provider's perspective. There's a ton of value in sort of understanding how those different steps along the chain think about an issue, because you'd be surprised at how differently they approach each of them. There is an easy trap to fall into that everything is sort of based on malice. There's a behavior that you're not happy about. I have really learned to embrace, especially having gone to all those different sides, the saying that you shouldn't attribute to malice what you could just as easily attribute to incompetence. That's not necessarily to imply that it's always incompetence, right? Maybe more lack of understanding in a lot of these. The biggest, most important takeaway is helping to understand that every problem that exists in the policy space is the product of an incentive or a motivation somewhere. At the core of every policy is an incentive, right? That's all policies really are. To either get a specific actor to do more of a thing that government thinks is a positive behavior, or less of a thing that government has decided is a negative behavior. If you want to be effective in policy and advocacy, that is incumbent upon understanding what motivates the different actors in the space.
So I'm curious, you brought up the nuances between provider being hospital versus provider being physician group. How do those contrast, especially where you do have the insurers on the other side of the table?
One really, really clear demonstration of that is played out by the Misprices Act, which a lot of things in the recent environment are. But you look at differences in inherent negotiating power between those three actors, right? Insurers, clinical providers, clinicians themselves, and facilities, especially in a post-NSA world, that negotiating power is drastically changed. Let's say an employer group, right? If you're an insurer who's a third-party administrator for a large employer, it matters a lot to you in order to sell your product that you've got your local hospitals in network, right? What employer wants to offer an insurance plan that doesn't have the biggest hospital down the street? That gives the hospital some negotiating leverage and power to get to a fair and reasonable in-network rate. Post-NSA, for the ED doc, that leverage isn't there, right? It doesn't particularly matter in most instances for an insurer, group or non, whether the ED doc is in network, as long as the facility is. They've got to provide that care, obviously. The opportunities for applying any sort of pressure on reimbursement are pretty limited to the IDR process. So, I mean, that's one, right? And then that, of course, leads to interesting dynamics between traditionally closer to being allies than in the past, hospitals and providers. Do hospitals start thinking, well, insourcing is a better option here because I've got that leverage and my outsource provider doesn't? It's interesting to see how some of those dynamics are going to evolve as implementation of the NSA does and as get factors work themselves out.
You've given a very professional, objective answer, but do you sometimes say you could bring more mojo, more bravado, more personal, I got to do this right when representing physician groups who are the care providers, folks who spent years and years training to deliver, the most important element of healthcare.
Look, I may be a little biased because I've been, with the organization for 3 years. And to your point, it's the clinicians that are providing care, right? Without that part of the process, there is no healthcare system, right? There is an imbalance of spending ability within the advocacy space between insurers and providers, right? The insurers have a really big lobby that's often hard to compete with. But I tell folks all the time, I would much rather take 10 clinicians around Capitol Hill to meet with legislators than 10 insurance execs, right?
Yeah.
There's inherent credibility because, again, they are the ones who are actually in the trenches doing things. And there's real risk within the system at the moment.
Do you have any interesting stories or experiences from the Hill that could bring that to light?
Man, where to even start? So I loved working on Capitol Hill. You couldn't pay me enough money to go back, but I loved my time on the Hill. I got my start with Senator Arlan Specter from Pennsylvania. He was a 30-year member of the Senate, an iconic member who was involved in all kinds of really important stuff. I could share stories about being there all day long, but I will always remember Ted Kennedy's passing. And Ted and Arlan were close. They worked on the Americans with Disabilities Act together. I mean, some really important stuff. I still remember how meaningful it was to me when Arlan asked me to write his floor eulogy for Ted Kennedy. A pretty proud and profound experience that, by the way, I felt completely unqualified. Who is, right?
Yeah, right.
There are fewer better representations of trust than being asked to do something like that.
It's a great story.
Yeah, it is. You've been advocating on the Hill for years when you were there, but also now on the other side and with the hospital association. What are some simple ways providers can be effective in this advocacy?
Absolutely. That is a question I hear so often. Hey, I want to get involved. How do I do that, right? We actually launched a program within Envision last year called the Envision Advocacy Champions Program. We heard that so much that we created a process where clinicians within the organization can apply to be part of this program. And then we did an intensive, basically 2-month long set of training sessions, about hour and a half long sessions. We brought current policymakers, former policymakers, congressional staff, and talk to our clinicians about what makes effective advocacy. Some of the key, most resonant points were helping clinicians understand that they do have some of that inherent credibility. More often than not, they're important parts of the fabric of their communities, right? Legislators back in the district are predisposed to at least listen to their concerns. Any good legislator, one of the top priorities is the well-being of their district, right? Sort of understanding where they have that ability to make a compelling case just by virtue of who they are. The other thing that was really important, one, it's the old saying of 90% of success is showing up. These legislators are a lot more accessible than most people think they are. You really want to talk to your US rep, reach out to their district office. They will absolutely meet with you. That one conversation might actually be enough to start a broader conversation about policy changes and improvements. Clinicians do often come out to DC for things like ACEP's LAC program, the Legislative Advocacy Conference, and that sort of thing. And those are great, but they often walk away feeling like, did I really make a difference, right? Was there any real change? I think folks really need the context of typically an overnight success is the product of years of work. It's single grains of sand. Did that one meeting that you had with one legislator, last week change the world? Probably not. But the cumulative effect of you doing that and several others doing the same thing and then you following up, that actually does.
Yeah, that's a helpful perspective. Stay at it because they hear a lot from a lot of people and after a while it can have effect. You were recently selected as chair-elect of the Board of Governors for ACEP's Emergency Medicine Policy Institute. Congratulations. That's a wonderful thing. What are your priorities for this position? What do you want to see EMPI do and how are you going to lead it there?
EMPI's core mission is to direct and often help to finance research that can actually move the practice of emergency medicine forward. And it is a target-rich environment, right? There's lots
a lot to study.
Yeah. We're in the middle of actually some great research that is likely to come out by maybe even early summer, if we're lucky, out of EMPI that's really looking at reimbursement and what real reimbursement looks like in the ED. There's been lots and lots of research about what allowed amounts and sort of claims-based total amounts of reimbursement look like. but there's never been research that goes the extra step of what we're actually able to collect. That's been a real missing piece, and it creates actually a really skewed picture of what clinical reimbursement looks like. I'm already really excited about that. That'll be done this year. And then, next year, I think there will likely be lots of opportunities around, Surprises Act and the effects of the IDR process and QPAs on reimbursement. Probably more than anything else, I'd like to lean in on a long-term solution on the Medicare physician fee schedule. We know that the current approach there is not sustainable. It's a really tough nut to crack. I don't think we're going to put out a research item that blows the thing wide open and solves the fee schedule. Back to the iterative process, we need to better understand how to get to the system that we all sort of want from the one that we're in. The current path isn't it. We're in SGR 2.0 at this point, which is not what anybody wants.
Patrick, your employer is Envision, right? Your constituency is broader. Is Envision a platform for, driving change, or is it that, Envision serves as a place to hang your hat while really ACEP, EDPMA, and other organizations really serve as the true platforms for advocacy? How does that work out?
I think it's a combination of all of the above. The societies are so important because they get to represent, like you mentioned, that really broad constituency, right? When ACEP goes and talks to a member of Congress, they get to generally talk on behalf of the whole practice of emergency medicine. That's crucial. There's no replacement for that. One thing I really noticed when I came over to the provider side was the lack of one-off group support for the work that the societies do. Going back to my experience with the payers, and I tell this story all the time. When I worked for both of the payers that I worked for, every Tuesday morning, I would walk down to 601 Pennsylvania Avenue. It's the same building that has the Capitol Grill, and go up to the 4th and 5th floor, which both floors are held by AHIP, America's Health Insurance Plans. And I'd sit around a big conference room table for about 2 hours every Tuesday with the other DC-based lobbyists from the health plans. And it wasn't just the big five. There were 30 of us, right? All the way down to Blue Cross Blue Shield of Tennessee had their own in-house dedicated DC-based lobbyists. And you don't have that in the provider groups. You've got the societies carrying most of the water. And then, some of the other groups have in-house government affairs folks. Very few of them have, dedicated DC-based folks. There's a real imbalance of that representation. I see Envision's role and my role within Envision as helping to supplement some of that really central work that the societies are doing, also filling some of the void perspective of those groups, right? ACEP, EDPMA, the ASA, ACR, the whole list of specialty societies can only be as effective as the input that they get from the folks on the ground, right? At the end of the day, they're representing those folks. They're not necessarily on the employee level out there seeing the problems firsthand. They need not just groups like Envision, but everyone on down the line to be providing feedback to the societies and willing to engage and pull some weight to show up and advocate. It's a long answer to your question. The real answer here is that it's a partnership. We all get a whole lot further swimming in the same direction. It's part of our responsibility as a group that employs 17,000 clinicians to be part of the solution instead of just taking a free ride from the societies.
No, it's a great perspective. So let's get into the meat of what drives a lot of the discussion we're all in, which is underpayments. How did we get here? Like before the NSA, what was the evolution of the out-of-network underpayment world look like? And then, snapshot to, okay, all of a sudden, lots of work goes into it. We have this new law, new regulations, new system. What does it look like, post-NSA?
As a foundational point, it's extremely important to understand the drastic differences in, again, back to motivations and incentives of the different sides of the reimbursement equation. Most importantly, understanding that insurers are paid in advance and providers are paid in arrears, and the incentives that creates. Every day that an insurer is able to hold on to an unspent premium dollar is a day that they're able to keep that dollar invested and generating a return. With that context, any sort of delays in reimbursement, or even better if they can, just not reimbursing, helps to explain why those delays sort of occur. Obviously, the opposite is true on the clinician side. We're not paid until often months after a service is actually provided. I mean, just diametrically opposed incentives there. You've got the cash flow issues created by delays in reimbursement on the provider side, and the return interests on unspent premium dollars on the insurer side. That conflict leads to the underlying motivation. The provider side wants to negotiate a higher rate in order to obviously increase margin, but to try to blunt some of that cash flow pressure. The other side of the equation is always going to want to spend less, right? That battle rages in eternal fashion until some other policy change happens in order to alter a behavior that's emerged. The NSA was necessary. We had gotten to a point where the patient was in the middle of conversations between payers and providers. That's not where patients should be. We're very glad that the NSA moved us away from that. That's not how a well-functioning healthcare system should work. The NSA has had second, third, fourth order consequences, mostly due to challenges in implementation. The NSA's IDR process is interminable, start to finish, of initiating a dispute.
Did you say interminable?
Interminable, just about.
I know you didn't, but that's my feeling.
Yeah, I mean, it often takes 8+ months just to get through the process. And even then, if you're successful, it might take another several months before you actually get paid. Deadlines are theoretical at this point when it comes to any step in the process of the NSA. Few things were more infuriating than early in the NSA process, when sort of a narrative emerged that clinicians were flooding the IDR process in order to slow it down. Clinicians were somehow driving that. Again, if you understand the actual finances behind both sides of that equation, you immediately know that doesn't make any kind of sense.
Yeah, it's not hard to figure out. I have my own conspiracy theory about what happened here, but how did a good law, you were probably involved, but a number of providers were involved in advocating for the way the law was written so that it looked extremely fair to everybody. I think we all felt real good about when the law came out. And then the regulations hit. Do you have any back office, smoke-filled room insight into how that whole thing went south and continues to go south through TMA 1, TMA 2, and TMA 3? They have done an amazing job of cutting the provider out of any opportunity for fair payment. That's my point of view. So let me hear from you, a measured observer of the political process. Temper my comments, please, but address how we went south on it.
Yeah, look, I don't disagree, but I will say I don't attribute the rulemaking process to malice. Right? I don't think folks at HHS and Labor and Treasury were out to get the providers.
Anyway.
I think the hard truth is that one of the goals was to reduce federal spending. The primary goal was protect patients. Second was find fair rates of reimbursement. Third, networking. But before, it was designed to reduce spend. And
$20 billion, wasn't it?
Right. It was part of the conversation. Regulators at HHS especially, but I'm sure Labor and Treasury involved too, were skeptical that the final product would end up resulting in the savings that they wanted. And I think they overshot the mark. I think they thought in order to get the savings the CBO had projected, they needed to really constrain the calculations around the QPA and really make that the baseline. And I think ultimately they were probably trying to end up with a QPA that erred on the side of a lower calculation. I think they overshot the mark. Yeah, the methodology is not what it should have been.
It was not pretty. How do you see the delays and disputes that are part of that's affecting the financial stability of providers? So that's hospitals but particularly emergency physicians and then other specialties. How do you see that impact? What's happening?
Look, there's plenty of evidence to point to around the impact. Envision just completed a restructuring process, right? We filed for Chapter 11 bankruptcy in May of last year. And, fortunately, we have a really strong leadership team and we sprinted through that process. Emerged in November. I think we are extremely well positioned for growth going forward. But some of the pressures from the NSA, along with several other factors, were a big driver of that. Other groups like APP closed down, right? I mean, APP was here and then 2 weeks later they weren't. There are lots of factors that play into those sorts of things. Reimbursement is a big part of it. It is almost certainly underreported, the degree to which clinical practices are at risk as a result of some of this reimbursement pressure. It's obviously a big news story if an organization as large as mine enters bankruptcy. The small 2-3 provider group in your hometown is less likely to make the news. I think there's a very real risk presented, especially to smaller groups that can't manage cash flow as well. Congress rarely fixes a problem before it's really broken. Our healthcare system is a problem that is quick to break and slow to fix. If you disrupt that pipeline, it can take a generation to get back to staffing levels and that sort of thing. So yeah, I really worry some of this reimbursement pressure is not sustainable.
Yeah, I think it's forcing some physicians, emergency physicians, and on-call specialists to go back to the hospital. And so I know of two groups where that literally happened. They said, we can't make this, we can't survive this, so let's go become hospital employees. Everybody takes that 25% pay cut, and then lo and behold, a third of the shifts are now filled by APPs. That's a separate conversation, but the economics are there for driving it down like that.
Yeah, I'll just add to that too, because insource, outsource dance with facilities is cyclical. A lot of the same challenges that have always existed are still there. They're just new incentives for them to give it another try. My real concern is honestly less around insourcing and more around vertical consolidation within plans.
Well, isn't that happening? That's a great point. That is absolutely happening. What is it? 1 in 7 physicians now work for a health plan.
A health insurer is the single largest employer of physicians in the country by a lot. I think there are very real potential consequences. They include both cost and quality. I'm very nervous about that vertical consolidation trend.
What is going on the Hill in connection with that? Because it seems like such a blatant conflict of interest, and yet it continues to grow, right? So you have an insurance company owns the largest physician group on the planet, maybe. I don't know. But from a patient perspective, it is not a good result. And it just is such an obvious place for thoughtful healthcare policy to sink its teeth into.
I think you are likely to see some more attention to that in the relatively near future. Back to what moves Congress, it's most often an action forcing event. Change Healthcare was an action forcing event. And it shone a pretty bright light on the consequences of allowing singular concentration within an entity. There's a very good reason that we're pretty close to achieving that single point of failure. I think there will be a whole lot more conversation around that, and hopefully a good hard look at the implications of the current path.
Payers have always downcoded emergency medicine claims. We struggled with that forever. Is there anything changing in that direction? See any light where they're saying, let's not bother with that anymore, we've already beat them up enough? Or is it, nope, emergency medicine so expensive, we have to force 5s down to 3s and only pay, lower levels? Anything changing in the go forward on that, Patrick?
It's so hard to say. It's been a persistent problem. There was guidance, what was it, last August, as part of some of the NSA rules requiring insurers to explain much more clearly why ED claims are being downcoded. I don't know whether there's been much follow through with that.
I've not heard providers saying, oh yeah, it's great to get an explanation of that CO43 code. What the heck did that mean? I'm not hearing that from billing groups, so I don't know.
It was supposed to be that, in this post-rule world, anytime a code was downcoded, the insurer needed to provide QPA amount for both codes, notify that they had downcoded, and then provide an explanation. You also got limitations within the 835. There's no free text field, right?
I know.
That's actually a great reminder for me. I should go check with my claims team and see whether we have seen any of that, because I bet we haven't. I think a lot of us have probably forgotten about it. It's such a tough nut to crack. And
yeah, it is.
Sitting in a large group like Envision, what recommendations for improvements for enhancing the process of resolving these claims? Obviously, there's a whole discussion around IDR work, not work, but almost leaving that aside, what else can be done to really affect getting paid?
To your point, I think the framework is actually good. NSA itself is good policy. Just the implementation has been the problem. From a true policy perspective, I wouldn't change much except where there's a real problem, loopholes. There are loopholes on the enforcement side. At the time that the law was being drafted, the main problem that they wanted to end was balance billing. So you focus on where the problem is, right? If the kitchen's on fire, you don't shovel water into the living room. So they made sure there were really strong incentives for clinicians to not balance bill. $10,000 civil monetary penalties on every instance of an inappropriate bill. That's a really good motivator. There's not a corresponding penalty for insurers if they provide wrong information on a remit. The only information that the clinicians have about the benefit design of the patients that are treated is what we get back from the payer on a remit. I can't tell you without the payer telling me whether the patient's in-network cost share is 20% or 40%. It is really, really difficult to catch some of the instances in which payers make mistakes like that. And they're making a lot of mistakes like that. I have literally tens of thousands of verifiable examples where insurers have either applied the out-of-network cost sharing instead of the in-network or outright denied coverage for a claim that I know for a fact is protected by the NSA, or have increased patient cost sharing following an IDR award, which is never allowed. It is a huge investment of both time and resources to build the systems internally to identify those mistakes in the first place, which, by the way, we're only able to do because we are a large, relatively sophisticated group. I guarantee there are small practices that don't even realize they're getting incorrect remits and are almost certainly sending bills to patients that they're not responsible for, exposing themselves to liability, right? They're still on the hook for $10,000 CMPs, even if the information they got was wrong. It's a strict liability standard that's applied. And even if we take that in the insurer, and even if they actually correct the mistake, which most of the time they don't, the only consequence is that they have to do what they should have done 3 months ago on the payment side. There's no real incentive to fix it. If anything, there's a perverse incentive to keep making those mistakes because, again, they're not the ones on the hook. If you really want to ensure that the NSA is working the way it's supposed to, especially from the most important aspect of the patient protections, you've got to put some skin in the game for the payers to make sure that they're doing things right, because you can either play whack-a-mole going after thousands of individual provider groups who are just following a remit, or you can ensure that there are sufficient penalties on the payer side where the mistakes are originating and solve the problem pretty quickly. If there is one thing that I would wave a magic wand to drastically improve the entire effect of the NSA, mirror those $10,000 CMPs that apply to providers over to payers, and create some enforcement mechanism for timely payment of IDR awards.
That's one of my questions. Is there a bill being developed? Is there any congressional action to do that?
I think there are some really smart provider-focused folks on the Hill who are looking at this really closely, and I know that they want to solve the problem. I think there's been enough attention on this. Like there was an oversight hearing last September. Sarah was just in front of several committees in the last 2 weeks with a lot of questions about the NSA and some of these same problems. I get the impression that Congress understands that there's a problem to be solved here and some loopholes to be closed. I'm hopeful we can make some progress.
A big theme here is conflicts of interest, misalignments of incentives. I think it was 2 weekends ago, the New York Times did this expose on Multiplan. A lot of detail came out exposing, these bizarre incentives, compensation schema to Multiplan as kind of a repricer of claims, almost at a fraudulent level, right? That they were essentially almost coming up with things to justify reasonable values where clearly was not reasonable values. What's your take on this whole repricing schema, compensation approach, impact on third-party administrators, and so on?
There's the old saying that history repeats itself. I think it is supposed to take a little bit longer before it repeats itself. I'm maybe dating myself a little bit, but this is Ingenix 2.0.
Where's Andy Cuomo when you need him, right?
Exactly. All the same problems that existed that led to the dissolution of Ingenix and the creation of Fair Health, it's the exact same playbook. I'm glad you mentioned the incentives, right? Because at the core of this is just a catastrophic misalignment of incentives between employers and their TPAs and providers. It goes by a couple of different terms or names, but it's best known as shared saving. It was really highlighted in this New York Times piece. Whatever the delta between the amount charged and the final amount paid, the insurer takes a cut. Anyone who understands healthcare pricing, and especially anyone who understands the post-NSA world as far as determining that final rate of payment, should immediately understand how predatory it is to charge 35% of the delta between the charge amount and the final payment. I think one of the examples that was provided in the New York Times piece was where the insurer ended up with a shared savings fee of like $50,000 or something, and the payment to the clinician was like $5,000. Those numbers aren't exactly right, but the orders of magnitude are. That's literally criminal. ERISA has a fiduciary responsibility providing health coverage to employees. I think employers need to understand that if they're not really scrutinizing some of these predatory programs, that they may be exposing themselves to real liability for violating ERISA. They have a fiduciary responsibility to their employees. It's hard to see how shared savings implemented in the way that was described in the New York Times could possibly coexist with that fiduciary responsibility.
You would think, and I haven't looked at the agreements between the administrators and these self-funded plans, But you imagine there needs to be a certain fiduciary type of responsibility there at all as well. It's a laughing matter when you look at what actually is going on. That's not a fiduciary responsibility. It's a self-interest, dollars only motivation in terms of how they act.
Again, back to sort of the incentives, right? What the incentives for a TPA are supposed to be. They're supposed to compete on the quality of their offering. Right? There are lots of TPA options. The factors are which TPA has the stronger network, which TPA has some of those better cost management options and benefit designs. Shared savings actually creates this perverse incentive to not network. The only way to capture those shared savings fees is to ensure that some of those employees are getting their care out of network. When you've allowed a fee structure to exist that actually encourages the provider to provide a worse product in order to make more money, you've completely devastated the incentive structure. That is the definition of broken.
I agree 1000%. Yeah.
Do you see any leverage beyond the IDR process or direct litigation? Any other way physicians can be achieving better reimbursement? It's IDR or direct litigation. Do you see anything else?
Part of the challenge in networking in the ED is that no one chooses their ED, right? I mean, for the most part, it's there when you need it. We always strive to provide the highest quality, but it's not like you can even compete on quality, right? Because that's not part of the networking equation. You have to create the structure to ensure ED clinicians are valued by the payers to the same extent that they are valued societally. Right? There's a policy disconnect. Emergency care is so important that we have legislated and regulated that you can't be denied it, which is a good thing, right? EMTALA serves a crucial purpose. Thank God for EMTALA, right? The impact of it on the insurer side is that it divorces it from the societal value. You don't want to actually create the same pressure on insurers that you would on patients if you got rid of something like EMTALA.
There's been talk of that, I know, but I hope that has been put to bed.
I don't think there's any reality in which EMTALA and those protections would ever be in jeopardy. I certainly hope not. Unfortunately, you do at some level rely on artificially created constructs to ensure emergency medicine is valued the way that it should be. The only other way to do it would be to jeopardize access. And I don't think that we could abide that.
I don't think anybody wants that. Quick question about state models in the IDR process. Have you found any states that are more favorable for you to appeal in to avoid the IDR?
Long term, where I think we would like to see things go, and I've talked to a whole lot of others about it, but I would be willing to bet that generally speaking, there's alignment. I would so much rather get the NSA and the IDR process through the NSA to where it should be than try to pursue, one-offs and piecemeals throughout the country. It's a whole lot of work to create the systems necessary to interact with those different dispute resolution processes. Texas is different from New York, is different from Florida, is different from Wisconsin. So the administrative cost of having a unique response to each of those states is not particularly productive. Far better administratively.
No, I can see that.
Some groups, though, are reporting success with the IDR process. I'm wondering, what is success and what are they doing to achieve positive results? And some people have the bravado to say, hey, we're doing great. What are they doing right? And what does right mean?
Well, one, it depends on how you define success, right? If success is purely how frequently you win within the IDR process, yeah, providers having lots of success. 74 or 77% of IDR episodes are found in favor of clinicians. And that's actually the most infuriating thing. The entire structure of the NSA was built around finding economic equilibrium. If you are an insurer and you keep losing in IDR, and you keep losing at around the same offer amount from the provider, what's supposed to happen is you realize, look, I'm paying this money out anyway, and now I've also got to pay the IDRE fees because it's a loser pays system. On top of that, I'm far better off trying to reach an in-network arrangement with that group at some level closer to what they're offering, because I'm paying that amount anyway. And conversely, if you're a provider group that keeps losing an IDR, the outcome you're supposed to reach is, I'm probably asking for a little too much here. I need to work on getting in network at a reasonable rate so that I can stop wasting these admin fees. The process is so backlogged and there's so little enforcement on timely payment, payers have essentially been able to short circuit that incentive. If you can hold on to unspent premium for long enough, well, you can negate that extra cost of going to IDR. And in the meantime, you're getting the added and unintended benefit of applying cash flow pressure to these groups. Yeah, we're losing an IDR, say the payers, but we're still winning because we can put cash flow pressure on you, accept the rate that we're offering, even though it's way below market value. I can tell you that our success rate in IDR, our win rate is much higher than what the data shows for the industry average. We're way above 74%. You understand the driver of that, right? The driver of why payers are losing so often and why the IDR process is used so much. It's because payers have been really stubborn about sticking to, or at least the payers that are going the IDR the most, about sticking to their QPA amounts as their offer amounts and as their payment amounts. There is not a data set in the universe that can support the QPAs that are being calculated by some of these payers that are losing most frequently in IDR. There was an analysis maybe 2 weeks ago out of the Brookings Institute from Lauren Adler and Matt Fiedler. I have a lot of issues with that analysis. I think they're missing some really important pieces. But even if you take their analysis at face value, that QPAs within that huge data dump, way below what even their calculations would suggest they should be. And they really have no explanation for that. If you put yourself in the shoes of an arbiter, for the sake of this argument, let's accept their numbers. If you're an arbiter, you have a binary choice because it's baseball style arbitration. You have to pick one of the two offers. Do you side with the provider offer that is, according to Brookings, at the low end of the historical mean for out-of-network payments, something that you can verify and support with data, looking at third-party databases and evidence? Or do you somehow choose in favor of the payer who is basing their offer on QPAs that have been invalidated in court, have been unaudited despite a requirement to do so, and being 2 years past an audit deadline, calculated completely inside of a black box with no external support for the amount that they're arrived at? I don't know how anyone in the position of an arbiter could possibly choose these QPA-based offers. Of course, providers are winning. Their offers are based in reality. I don't know what these QPAs are based on, but they're not based on what are actually being paid to in-network providers.
Patrick, the way I think about it, though, slightly differently, is that if I was a payer, essentially the stats sound like I am losing in excess of 70% of the time. These are numbers, people. What am I doing wrong? Okay, I'm currently relying on QPAs. It's not working to win. Let me do something else to win. How long are they only winning 15% of the time before they say, we thought throwing the QPAs at this is going to be effective. It's not, so do something different and win more.
So I think a couple of things. One, back to their ability to hold that unspent premium. As long as the delays are what they are, they're able to blunt a lot of that impact. There's a proposed rule that's going to get finalized sometime later this year that I think actually very well could, if implemented correctly, start to speed the process a bit. I think once that starts happening, if disputes are resolved a little more quickly, you will start to see payers adapt their strategies. The other facet is that a lot of these are ERISA plans where the insurer themselves is not the one ultimately paying these claims, right? It's the employer paying the final amount. What I've seen of contracts between TPAs and employers is that they've already baked in that those fees are also the responsibility of the employer. From the payer perspective, there's really no pain unless the employer whose TPA starts to really understand what's going on here and start to push on the payer to find a better solution here. There's just not that pain to be had, and there's not enough incentive.
Interesting. Yeah, because the stats bother me. I mean, good for the providers winning, but too good of a batting average suggests that the opponent's going to change their behavior.
And I wish the success on the win rate translating through to successfully collecting revenue and blunting the cash flows. But again, it's 8 months more often than not to go from initiation to collection. That is a mandatory transfer of the time value of money. That's time that payers are collecting a return and providers aren't.
But put simply, the time to payment after a successful IDR decision is really solved based on an interest penalty or penalty of sorts. Your favorite word is there's no incentive to get them to do anything. So why would they sit on it and wait?
Exactly right. If I was going to wave a magic wand, enforcement. You need meaningful enforcement mechanisms to fix these just glaring loopholes.
You have to invest money to get through that process to not get paid.
And I think so that is so important, often completely lost in the details. Right? The administrative waste that is being created through non-compliance is staggering. You talk about cost drivers. The money that provider groups have to invest to spin up an arbitration process in the first place and then chase after these non-payments to adapt to changing rules. That is administrative cost that doesn't add value to the system and is money that we never get back purely due to non-compliance and a lack of enforcement. It's very frustrating. We're bearing the brunt of the cost for the side of the equation that is not following the rules.
Patrick, we're coming to the end of our time together, which we think has been tremendous. You bring a wealth of experience and knowledge and insight, and I even like a lot of your opinions, which I appreciate you willing to share. What are some of the takeaways? What are some of the lessons that you would share with us about the implementation of the NSA? What are some things that are just like, yep, this is what will lead to a balanced and effective process?
Like, I think first and foremost, we shouldn't throw the baby out with the bathwater. The NSA itself remains good policy. We just really need to fix some of the glaring issues that have come up. And you can do most of that by simply closing some enforcement loopholes and ensuring that all sides are held accountable. I think other than that, back to the very top of our conversation about 90% of success being showing up. Everywhere I go and everyone I talk to, especially on the clinical side, I really try to drive the point home. You have the ability to actually influence this conversation. The problem is that not enough folks show up and ask for that meeting with their member of Congress or their staff. Bring those sort of opportunities together. Our most effective advocacy resource is our clinicians, and it's really underutilized. Get together and identify ways to get in front of policymakers and tell your story, because it really can make a big difference.
Thank you. Really impactful time together.
Really appreciate it.
Patrick, loved having you on the program. Thank you. It's a good way to kick off the end of a Friday and look forward to the weekend. Thank you so much. Appreciate it.
I really appreciate it. Thank you.
Yeah.
Thank you for listening to The Strain. Please subscribe and listen to The Strain wherever you get your podcasts. The Strain is sponsored by Eliot Group, financing healthcare litigation.